Hi everyone, Adam here from Trade with Precision and welcome to IC Markets Market Commentary. So quite a busy week, and let's have a quick look at actually what transpired. So first of all, I want to draw your attention. We've had an incredibly strong US dollar lately. It's almost on fire. We can see that a lot of the markets are really stretched further than their normal behavior allows. I'm not sure at this time whether that is the beginning of something new or whether we are likely to have a strong correction anytime soon. But there are things to look out for to know which way it's heading. Now, first of all, I want to highlight here that we closed this week, the weekly candle on Friday. We've now had two rejections here, similar rejections. They're not very bullish, but they are nevertheless two strong rejections of that key level. If we go down to the daily, what you'll start to notice here is that we're starting to get some bullish divergence on these indicators. We can see we actually finished with a relatively strong swing low and some bullish divergence. Usually what this means is that the euro is going to attempt to try to break this downtrend and work its way up. That doesn't mean it'll succeed. We could see if the dollar is going to continue to strengthen, we could see price encounter resistance here and just continue down or consolidate for a bit before continuing lower. However, I would say that as we start to break these highs, if we do, especially if we break this high here, then I think it's much more likely we're going to see a much deeper correction and that dollar will weaken temporarily. So that is what I'll be looking for this week. Also, dollar yen, notice how the week finished on the Friday. So dollar yen, we know that the Bank of Japan would very much like this to be staying ideally below that 150 level. We do have an uptrend on that weekly now. It's a confirmed uptrend. We look at the monthly, we have a strong, healthy uptrend on the monthly. So that dollar yen is still very much pushing to the upside, but we also know the Bank of Japan are going to continue to push to get that reversed through various means at their disposal. So we had a bit of a correction here. We are overextended. So it's possible for me this week, I'll be looking to see if we have a bit of a correction this week. Now, moving on and having a look at gold. Gold has no clear direction at this time. If you go back through previous episodes here, you'll see that we framed it this way. We've got highs up here and lows over here until we sort of conclusively break through the high or the low. We really are just stuck in no man's land. So very interesting here. What we did manage to do was sort of break through these lows over here. We broke through those lows. We've come back up. So we kind of had this beginning of an uptrend and then that broke. So gold is effectively still ranging, and actually what that really means is if we have a look at it from a much higher perspective or much higher time frame perspective, we'll find that it is still effectively working its way through into a wedge. Okay, so likely just keeping in mind what's happening with the US administration, the largest economy in the world. It's possible that we're really only going to start to see action, especially as we're heading into the holidays now. We'll start to see the markets start to kick off and maybe start to decide what they want to do in the first couple of weeks of January. All right, having a quick look at crude oil. So crude oil on that higher time frame continues to ping pong between these key levels and testing that level of support, and the pressure is building up for it to break down to the downside. Unless it breaks up through these levels before that, I'm expecting a big break and a drop on crude oil in the coming months. Now, looking at the S&P 500, so last week we had a strong weekly correction. We also finished with a strong build-up or a recovery. And so what are we looking for here essentially is, are we looking at the beginning of a monthly retracement because we've had a really good run, or are we simply looking at a weekly retracement? The weekly looks nice and healthy. Most of the MACD indicators, the momentum indicators on RSI look very strong and healthy. So, innocent until proven guilty, my first assessment here is that the markets will attempt to continue up from here. Yes, we could do with a monthly retracement, continue on with that, but at the same time, and of course, this is the time of year, Santa Claus rally, and after the first few months of the year are the most bullish, but there wouldn't be any harm in having 1 or 2 months of a correction and then still finishing strong by April. So that is something I'll be having a look at here. We've got a strong recovery on Friday. Let's see how that goes for the tech, for the NASDAQ, for the tech 100 as well. You can see this sort of indecision candle, but a relatively strong recovery off that 50-period moving average on the weekly. Very much that there are a lot of buyers below this. So if we have a look at the Russell 2000 as well, especially when we go to the higher time frame, you can see it's rejecting those highs. This uptrend is still intact at this time, but that is a very, very strong rejection. All right, so the reason I'm looking at this is because this could simply turn out to be a weekly retracement, which we have been overdue for, or it could ultimately be the beginning of a monthly correction. But the timing of it is very unusual. The market behavior is unusual in general, but the correction is also, the timing of it is unusual. This time of year, we have the Santa Claus rally. Markets tend to climb, and on the way through to April, on average, every year they have a bumper season. And so I want to be cautious now when I see this strong reaction. We have a look at Tesla. Tesla's obviously had it's been on fire. We can see we've had a bit of a correction here on the daily. It's pulling back, produced a bullish candle in the moving averages. This is usually where I'd expect it to take another run, except for the fact that the weekly has produced a strong bearish rejection candle. It's also very overextended. So should we break the low here? I do think at some point we could see a correction down towards 300. The question is that what we're going to see happen now? If we look at it from a monthly perspective, of course, we're also incredibly overextended. So the markets have been running very much, I don't know if you've heard that expression, tequila in the punch bowl. Certainly the markets appear to be running on steroids, and that isn't sustainable in the long run. The question is, are we going to have a bit of a correction now and then just resume that bull market or bullish trend in the new year? NVIDIA here coming down, producing a bit of a head and shoulders pattern on the daily. So the question now is, will we get a correction down? That correction would bring us back down towards these previous lows. And then, of course, finishing off here with Bitcoin. Bitcoin also had a strong correction this week. Didn't really recover as well as some of the others. So when you look at it here, you can see it is still very much overextended, still battling with that 100,000 level. And there's a big struggle going on here. So for now, my expectation is it would be very good and very healthy for the markets to have a big correction here, even back down towards these previous highs that would still maintain that strong uptrend and still look very strong and healthy. That's what I'm really going to be looking for this week. We're heading into the holidays. The holidays tend to see the markets going into a coma. This is one of the rare industries we live in and work in where most of the people take time off and the market tends to go into a coma until usually even the second or third week of January. So I wouldn't be surprised to see the markets possibly take a bit of a breather between now and then. So stay safe, keep an eye on the markets. We are certainly living in interesting times, and we'll see how the markets react this coming week. Thank you.